Whoa, I suppose it helps if I turn on the old sound. Hey, good thing I looked up at that. Good morning, everybody. Welcome to the Breakfast Club. My name is Darren, and I'm the ThetaWave Trader. One of them, one of the many out there that are growing every day. People who just relax into their trades, don't panic into their trades, don't feel too much stress when you do your trades. That's getting into that ThetaWave mindset, right? It's not a person, it's a mindset. So you want to kind of get into that place where you can see a trade, execute on the trade, trust that your trade's going to go where it's going to go. And if it doesn't, you just close it off and wait for your next setup, because it's a matter of repetition. You just need to see the markets moving in that repetitive way over and over again. And you'll see that it's something you can start to count on. And that's where you get consistency, is trusting in your process. And then you got to get out of your own way, because then you got to deal with the hardest part of trading. It's all the greed and the need for more and more and more, instead of just saying, that's perfect. I can close up shop as soon as I make X amount of money, or I've accomplished X amount number of trades. I'm done. Move to the sidelines like a business. You got to shut your doors and get some sleep sometime. You got to enjoy the family. You got to enjoy the things that really juice you in life. Anyway, I'm standing on a little soapbox here. Let's look at the 15-minute, 5-minute. So now because it's so late in the run, what I want to see now is, do we get a reaction up here above these little hourly highs? We pop up above them. That should be just enough to fill in that hourly BISI. And that will be right there. 4 hours right there. So if we just run up into this box, I'm looking to see if we start to turn here. Itchy nose. I'm looking to see if we turn there, and if we do, then I'm looking to see if that 1 minute, 5 minute, 15 minute has a reversal pattern that I can get into for another run back down. All these bull candles, you want to start rebalancing that on the back, all the way back down again. So otherwise we go into the continuation or the extension continuation models. Morning, Hans. How you doing, buddy? Yes, I was muted. I was muted, my friend. Morning, Adi. No sound. You got sound now, I hope. Y'all can hear me. Just give me a thumbs up. Six of you. Yes, sir. Excellent. Thank you, sir. Thank you. Thank you. You got the same spots there, Hadi? You got the hourly and the 4 hour sitting up in here. Yep. Okay. And the 15 minutes sits right up at 992. 992. Ooh, okay. So 992, that could go up quite high then. Wow, that's way up there still. So if we get through here, look for 992. That'll take you all the way up into this P2 here. I got a P2 up there. Extend it to the right, to the right. That's your 15-minute upside objective. 1 and 4 hour though, I think those are higher time frame holds. That would be interesting because that would send us up into 951 for me would be next. I'm going to put these levels on here so you guys can see them. That'll put you close to the 982 too. Okay, those are my numbers this morning. Yeah, I got 982 to 992. Got you, the D. Same, man. So just wait for. Let's go through a bunch of other these. I'll try and blast through these. And this is it possible? I think I'm going to get through this in 15 minutes. Yes, same spot. We're looking for 7002, which I think you just hit it already. Yeah, you've already through that 7002 to 7010 on the 4 hour. That's your upside objective for ES, along with the 7016 zone. Oh, that's my new bot. Turn that off. Mr. Jones. Mr. Jones has an upside objective. If he decides to get with the program here, that's the upside objective for him. That's P2. Even if they don't get P2, then you're looking for P1. I don't know how many people trade Dow Jones. You guys notice that your trading view now, when you put one line in, it automatically starts to draw a second line and the third line until you right click and get rid of them. You gotta get fast with your fingers here with the right clicking. Oil. Where's oil? Nice little reversal. Oh my goodness, look at that. That nice displacement candle. Then it comes back and literally pops right into the delicioso. Look at that. All the way up to that little right there. Retrace all the way back up inside the BISI. Right into it. Get short. You could have got short 1, 2, 3 layers of that. All the way, all of them got in, and then turned, and now you're heading for right here. and you're in there already. You clear that out, and you clear the market structure out down below. You're looking for this fella here, I guess. That must have been something I had marked off earlier. That's oil. If you get back above this level, see how we've traded through it and then back to it and through it. So that's one of those chop type situations. Wait for market structure to shift. Take the high or the low. Don't keep jumping in just because it gets on one side and the other side of that SIBI. Once and it fails, wait. Otherwise, chop chop. Bitcoin. Where are we at with Bitcoin? Oh, Bitcoin gave you a nice little, nice sweet little entry there, man. Here's your Bitcoin entry. Right, literally to the bottom of that candle. That's the box right there. Came down, tagged it, went up, tagged the second one, went up. Cleared the high, came back to the high. Look at that last candle. Ding. Sent it higher. Keeps clearing out the bull traps on the upside. Then we see a reversal, change in direction. Trades back into it. We trade below it here, trade back into it. Came right into the second level layered entry. Comes back down deeper inside this range. You're at 50%. Pay yourself. Use your take profit model 1. Then you wait. There's an immediate rebalance. Trades through it. And then trades through our candle at the high. Trades back to it. Wicks all the way down. Stop loss has to sit here. No, actually it would be right there. I usually put one tick below that low, so it would have came back and taken you out there. Because it didn't take out any previous high. Like if had it taken that high there, you could have paid yourself. Would have taken you out there. So then you wait. And now you're above this one. So you want to see this hold price now and keep pushing higher. Bitcoin. Gold, gold, gold. That is some chop going on there now. So be careful in gold. And silver. Holy crap. Silver did some shaking last night. That horse was spinning. It shook some people off, I tell you. All the people that demanded $100 out of silver last night just got their ass handed to them. I saw there was a big dive down there last night. Anyway, what are you waiting for? We're seeing a retracement back into this consolidation, so be careful. You could see a continuation on the downside and take more of this liquidity sitting below the market on a 5-minute chart. So on this is a 5-minute chart. Let's go 15 over here. 15 minutes coming back into the zone. So I'll be watching. My go, no go zone is right here. This is called the go, no go zone. It's not a Michael thing. That's just a Darren thing. Sometimes you got to come up with your own stuff, right? You rename things so they sounds. This is a go, no go. I call that a zone. Michael doesn't call it like that. Michael doesn't even call that area as a anything. So that's, I get to freely name my own little zone. But you watch. Price will come back into this level, and either you'll see some sensitivity off of it, and all you want to see is it just tag it and roll over and come back down. If it closes above this and then stops right there, comes back, tags this, then runs through the zone, then look for this premium box up here above you in gold. Otherwise, you're sitting near the middle of it anyway, so you're in the middle of the zone, and that's not only is it the no-go zone, it's a don't touch me zone. It's a sensitive, you could get hammered in either direction. So if you don't know for sure what you're looking for, you're guessing and you're gambling, and you better hope you're right. Slant on that one. That's the big power candle. Look at that, 4 hours, just smash right back through everybody who wanted that to get to $100. We got our 992.34. Those are the three levels we put in there a couple of days ago. And we've hit it, bounced off of it nice and cleanly, hit it perfectly, started on it, and got halfway through that. And Salamo came all the way back against people here, through the BISI, but did not close below it. It just wicked all the way through into the rejection block, came right back up again, and now we're sitting in, where are we now? There's nothing in the 4 hour. It's got to break this level at 92 big figure in order to go higher. Otherwise, that's just a rollover and keep coming lower. Yeah, we're definitely not going lower right now. We're still bullish. Overall, we're bullish. And until we break this 2 candle block here on a 4 hour, you're going higher still. What's the rule? Stretch it out, man. There's one there. One there. Okay, so we do have a turn on the, we do have a turn on the 4 hour, but I'm not overly convinced yet because we're sitting in the middle of this kind of small little range right here. We're sitting in the middle of that. So again, it's a gambling type of situation. Wait for these little tiny imbalances to see if they hold price and keep pushing us lower. I'd wait for a structure shift below these 2 candles before I consider anything there. This is a silver's reverse, changing direction right here. We've traded above it, came back into it, went higher. You're now into the bull trap. See if that bull trap holds. If it bounces and comes back through this level, look for a retest of that level for the model number 3, range continuation, or range extension, then the continuation. That's 5 minutes. Anyway, that's silver. I got 7 minutes now to get through the rest of this. AGNC running up for me. That's long-term wealth right there, my friends. If you didn't take my advice back there, that's fine. You're not supposed to. I'm not an advisor. But catch that in April. That's what we're going to do this year. Look at that. That's a $2, at least a $2. No, that's $8 all the way up to 9, 10, 11. That's 30% return on your money since April last year. Plus it pays you 10% dividends. So there's 40% return on your money in 1 year. Can you believe it? That's wealth building, my friends. This other stuff, this day trading, that's fun stuff. The real wealth building is in the long term. Knowing how to hold it long term. Anyway, all these are nice. This one, I bought this at $10. It's finally broke even for me. Not a long time ago. I was like, crap. And it took a big dive down in here. And then I tried to get more of it here. Right off that reversal. Didn't play the rule that I teach you guys. Is this. Wait for the bull trap to let go. Come back to the bull trap. Catch it long. You would have caught a perfect $8.93 long there. And you'd be sitting another 10% up in the last, just at the beginning of this year. We're near the, right around Christmas time. There's a Christmas gift for you, right on December 25th. Hello, Merry Christmas. There you go. Little piggies, they're in that consolidation still. This was a downside objective for sugar we had. Look at that. We went right through that objective and we've come charging through that objective. So that was the downside and we're done and dusted through that. That's good. Here's our little down close candle and cattle we were calling for. We're just coming into it now. Yeah, we hit it right there. That's the carrot. I should have just put the carrot inside a box and you could have seen it right there. box to box. So no box here yet. So this could just pump all the way back up. So you go box to box in pigs or cattle. Gotta love it. Gotta love it. We're still inside the weekly fair value gap for bonds. I have 4 more minutes. All of my friends over there in Forex land. Let's have a look at the Dixie. Upside objective hit. We've got swing first candle to the left, trade back into it, go higher, clear each one of the bull traps. They're cleared out on the top. This one trades just above it. This one opens above it, comes back, tags it, and then rips up higher. So what do we expect on the other currencies? We're expecting downward pressure on currencies. So downward pressure we get. This is the hourly, and this is the hourly. Okay, so downward pressure. So right where this starts here, watch where that starts there. Same place. So as this starts to put pressure up, that puts pressure down. Right? This right here puts pressure up, and the British pound, look at that British pound really respond to that downward pressure. Right? So once you understand what the Dixie's doing, then you look for the Euro British pound combination, and then Euro's the first one in the pair. So as you can see, if this is going higher, this is the sixth sister of the two, of those two European type of currencies. Who is the weakest one? That one. So you take the weakest one in comparison to the American dollar. So that's how you kind of look at them. Look for the weakest one out of the two. And this tells you that the British or the euro dollar has got more strength than the pound. The pound is really going to respond. So you look for your short opportunities in the pound, like for example, this low taken here, drop below it, come back into it, catch your short, and you capitalize on the weakest of the six sisters. Does that make sense? I hope it does. I've got 1 more minute. Banks still inside the range. I don't see anything there. Thank you. Oh, that's my model. The DAX. Here's the DAX. We've had, this is the hourly here, hey? Got nothing for you in the hourly, my friends, until you break this bull trap. You're just trading back up inside this right now. So if that freezes right there off of that, and you get a change in direction, but you do right here, trade back into it, look for it to go lower. So that's going lower. Wait for a structure shift if you want. Come back into this and keep pushing lower. Look for this guy here. There you go. So that's what you do. You look for this higher time frame to confirm. That's a great place for it to turn around. Do I see an opportunity? Yep, right there. Get short there 5 minutes ago, and you would have got that little chunk. And as soon as it breaks that low, move your stop loss to break even, pay yourself, and sit back, relax, drink your coffee, and watch the market. And if it takes off, great. If it doesn't, you made a little coffee money for the day and didn't cost you anything for the trade. Anyway, and we're back. So that's our first objective. Look at that. We nailed our objective 1 and 2. That was right off of the rejection block. Yes. Return. I missed it. Right there is their short. I missed it. Didn't get back in time. So does that make sense to you guys? Are you following me? Are you with me? Is the logic there? And now you just kind of wait. You wait for some market structure shift. Don't jump in on the first 15 minutes of the open. It can be quite chaotic. So if you're feeling the anxious right now, even though we were calling this just to like, oh, I should be in this, and you're chasing price and you feel like you gotta be in it, don't do it. Don't do it. Don't chase price, man. Because sometimes it's more about discipline. It's about getting yourself into situations that give you the lowest hanging fruit, as Michael would call it. It's that walk in and pick the fruit. Don't go in and raid the tree and hope that you're going to get the best fruit. Take your time. Walk around the tree. There's plenty of it there. Don't rush, my friend. Don't rush. Good morning, Abs. Shepherd. How you doing, buddy? How you feeling? I don't want that to be the only conversations we have. Like, how you feeling? It's good to see you, man. I hope your day's going well. So, see that key level there, that 951, found some sensitivity. You get a change in direction right away. Big displacement candle. Came back up, give you one opportunity to get yourself in on that. You get short, looking for discount box, immediate rebalance. That'd be it, box to box for me in that range. Nice and tight, done, dusted. Move to the sidelines, wait. Now you're looking for a range extension model or continuation or continuation. So we're in, that was an internal range liquidity hunt, reversal model, internal range liquidity hunt model, and now you're looking for extension. So if you miss it, don't sweat it. Don't sweat it, man. We're gonna get one. Wait for, see all this chopping back and forth? So it's just slowly kind of moving in the direction you want it to go. Then all of a sudden you get all this wicking stuff. That'll really send if you're one of those people that stare at how much money you're making over here, that'll really throw you off. Especially if you set in, like, it's going, you're chasing this, and you go, it's going short. Yeah. And then all of a sudden you see it going higher, and you're like, no. And you're feeling the pressure because you've over leveraged. And now you're like, now I'm getting the emotional dump. I'm getting the big reward. Like, I knew it was going to go that. Oh my God, that scared the hell out of me. Well, then you're not trading your setup. You're gambling. So now we watch right here. Wait for the candle to finish. Make your decision on the close of the candle, not while it's forming. While it's forming, you get to see how it's acting. What do we got coming up here? My buddy Abs and his 6 a.m. candle and the other 6 a.m. candle. We retap that. We traded below this right there. There's the short there. I didn't take it either. My mind was somewhere else and I didn't actually look at that. I called it, but didn't take it. So looking for it to go. Wait for the 15-minute here. Is there a 5-minute? 5 minutes already hit that one as well. I don't know why I've got the Pink Pony Club going around and around in my head. I don't know if I even heard that song for a while, but it's like Pink Pony Club do 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 in my head. And that's why not you all have the same thing. Pink Pony Club. I'm gonna keep on dancing at the Pink Pony Club. There. Now you guys get to have it rolling around in your head. There's another tap on this low. That's a short there. And what are we looking for? Oh, it's already hit it. discount box here. So from when it hit to here, that's the target. You've hit it already. So now it's another wait and see game. There's lots of little opportunity, lots of data points in here this can reach for. So it's just chopping back and forth. You think there's unfinished business there? A D on the hourly? I think hourly rate is already at 926, right? And it ran right into, look at the hourly last big up close candle on 11 o'clock on the 13th. What did we just hit there? Right in the mean threshold. Cleaned out that high. All those little highs there. There's a little pool of liquidity sitting there, and now it's running away with it. So you see how these lows have been taken, retested, lows taken, retested, went lower. Now we're looking for this to break here. No, that's that one there. Now I gotta wait for that to break. Look for a retest. Now you want to see that just peel out of there and come back down lower. That's one tick below that low. If it closes up back up above that, wait. We have a pink pony club in. Do you really? Oh man! So you have the visual every time you drive past it. Oh, that's got to be painful. That's in Atlanta. Is that what that is? ATL means Atlanta. Oh, on ES you have some upside finished business. Okay, I hear you. How you doing, Big Chief? I've got. Good morning. I'm doing fine. Thank you very much. See how we traded back through this level? Got to be careful, you guys. This is where you get this ripping back against you crap. And it is 15 minutes. We still haven't got anything. You're still sitting around here chopping around. So just wait for things to mellow out a little bit. Doing better. Do have surgery at the end of the month. Oh, great to see you back there. Thank you very much, Shepard. Man, I hope the surgery goes well. It's like Peter. I haven't heard much from Peter lately. I have to check in with him, make sure he's okay. He's getting over his surgery. Abs, how do yours, you're feeling better after yours? And there's lots of people getting some work done out there. And you realize, I think those people really start to realize what's most important in life. Unfortunately, if you're in the States, the most important thing is paying the bill after that. I couldn't imagine getting stuck with big bills like that and having to pay it. That'd be hard on anybody. So let's get back here. Let's get these guys an opportunity to get some money to pay for these things. Chop. Recognize it. Stay out of it. Look for something else. Somewhere else that's cleaner. Don't force yourself to be in this market just because you say, well, I only trade NASDAQ. Okay, well then you have to sit on your hands, go have a coffee, go chat with your wife, go outside, enjoy the sunshine for a bit, and come back in half an hour. Or at least 15, 20 minutes. Wait for the macro to begin. Randy, yes, probably 30 years since I took a stack of one of the ones there. Gray keys. Oh, you're new for gray keys. You're new. What are some stocks you think I can trade that has the algorithm if I only have $100 to start with? Find yourself if you're only got $100, you want, this is me personally, I'm not trying to give you financial advice, I'm just telling you what I would do. I had $100, 100 bucks, not much you can do with $100. You've got to find yourself some stocks that are not $100 a share. And then you got to wait for it to get to $110 before you can even make 10%. You take $100 and you can find stocks that are worth $5 and they go up 50 cents. It's 10%, right? But the lower the stock value, the more you start getting into those penny stock, high risk type of situations. See why that 15 minutes is, you got to be careful. If you're all gunning for these lower lows. Oh, my wife's leaving. I'll be right back. Oh, look at that. Rip back and take out some stop losses. Oh yeah, where was it? $100, right? Yeah, I'd have to look for specific stocks. If I had a goal of $100 and turning $100 into a $110 or $115, then that'd be the place to March, April. I'd say look for something in March, April. Do you have, the question I guess for you is Gray Keys is, do you have an account like with a broker that you can short a stock as well as long a stock? Because if you're just buying stocks, like most people, 90% of people out there, they buy a stock just to catch it for a long and hope that it grows in value. Whereas, as you see, we look for ways to short a stock, to buy a stock. We can buy and sell the stock. So that would be my question is, can you find stocks that you can short as well? And most penny stocks won't let you short them. And if you short them, you're using an account that will, what do they call that? I'm just drawing a blank right now. Margin account. You don't want to trade on margin, man. If you don't know what you're doing, you do not want to trade on margin. Your $100 would be gone, and then they'd be coming for your car. And then your $100 would be gone like instantly. Trading on margin is dangerous if you don't know what you're doing. So penny stocks, $100. Yeah, not much you can do with $100. If you understand trading and you understand stocks, or sorry, you understand the algorithm, then you can take that $100, put it into a prop firm, and trade a prop firm with $50,000 or $25,000. Do a prop firm that you can do $5,000 with it and trade it up to, I think it's $5,300. And then you pass your prop firm, then you get 20 or 80% of whatever you make off of the stock. So that $100, just turning that $5,000 stock into, or that $5,000 prop firm account into $6,000, you get $800 of that. So now your $100 investment is now $800. So you've got 800% return on your money. That'd be the quickest way I could think of doing it. In terms of buying a stock, to answer your question, I don't know of any stock specifically that you could make decent returns on. If you're really good at trading, start off with a prop firm. Otherwise, you're just sitting there waiting on $100 to grow forever. That's the quickest way I can think of to make it grow if you're confident on how well you can trade. So no, I wouldn't do penny stocks. If you're good at trading, put it into a prop firm. It's a one-time thing though. Once it's gone, if you screw it up and you blow your prop firm account, you'll know that it's you're not a short-term investor. I just want to ask for your advice, if you don't mind. Once completing the mentorship, what are the traders steps next? Once you completed the mentorship, ask yourself this question. Once you finished Michael's mentorship, and I'm assuming you did the full core content, I'm old school, man. When people say to me, what should I do? I say, go back to the very first video that Michael made, start there. And when you get to where he's finishing up his videos right now, you're ready to start exploring your own. Like, I put in thousands of hours. I'm not kidding. Thousands of hours every year on the markets. You know, you think about just the 500 videos I put out there, they're all averaging around 3 hours. That's 1,500 hours just here in front of you guys. Right? And that was just starting this 3 years ago, almost 2.5 years ago. So if you are not putting the work in, if you're looking for a quick solution, I can't give it to you. Take the next, after he's finished his first core content, go back over the core content again. You could go over it 2 or 3 times. I could go back over the core content right now and still learn new things all these years later. And I started in 2016. So you got to get the next video set. Like, you go through all of his trading plans that he's got. He gave those away. Those were all like super top secret, protect them with your life type of programs when he came out with them. He didn't want anybody sharing them. And now he's giving them away for free because people were stealing his shit, because people are corrupt that way. They're all trying to make a buck off of him. So go through his core models. He's got 12 core models. Go through those. See which one you like. See which one is best reflects your trading style. And then start his 2022 mentorship. All the little side videos. His sniper series. If you can find those, get them. They're hard to find. He doesn't even have them on online anymore. And yes, I have them, and no, I'm not giving them out. That was just a promise he said, don't give out this stuff, and I'm not. There's people out there that probably have it, that are willing to give it or sell it to you, but it's not the be all end all. Do your due diligence and go through all of his videos. Then come back here and see how we apply it. You don't even have to come back here after you're finished, because it'll take you years to get through it all. Make tons of notes. Get binders. And I've showed you guys before my binders full of notes. Make notes. Make cue cards. Get up. Move around. When you study, most people don't know how to study properly. You got to make cue cards. Break it up into bite-sized pieces of information. When I was in paramedic school, I used to take a 4x5 recipe cards, I slice it into quarters. So I'd have, like, I buy a pack of 100, I turn it into 400 cue cards. And they were just small enough I could put them in my pocket. And I'd make a band of them, and I'd study, morphine or drugs or something like that. And then I'd take the cue card, I'd put one piece of information on one side, I'd put the answer on the other side. I'd make puzzles out of it. I'd get a whole series of cards, I'd then make a puzzle. And you could literally do it on the table, so it's a visual, and your brain is looking for a reference, and you're actually piecing it together. I used tons of different techniques to study material, and cue cards are a great way to do it. I made cue cards for Michael's stuff, and you go through all of it, look at the card, look at the pattern, take a picture on the screen. I used to glue it back in the day. I used to just glue it to a piece of paper, and then I'd look at it and say, what do you see in this chart? And then on the back, it would give me all the answers, and I'd look at the chart. So that's how you kind of find new ways to stick the stuff inside your head till you get really comfortable with it. And you can see I'm pretty comfortable with it. I can call pretty good accuracy on where I see price running to. I can trade an internal range liquidity hunt like no one's business. I can see it very clearly. And once you see it, you won't need me. You won't need me at all. Hadi doesn't need me. He can see this quite clearly. He just hangs out because it's a great place to hang out with people. So I guess to answer your question, I have God. Take whatever the next video is in the ICT series, study that, make notes. And if you want more hints on how to make notes, contact me in the Telegram channel. I'll be more than happy to go over this stuff with you, because I love teaching and I love learning how to learn. So yeah, I have a very, very colorful history about my learning and where I started, where I thought I was, self-image, all that kind of stuff. And now I love it. I love learning. So that's where I'd say my suggestion to you there is, God, just go ahead and grab the next video, eat it up, and then come in here and watch how it's applied. And then you'll see application versus the textbook application, and you'll just see And you'll see a lot of the stuff in here that Michael doesn't teach, but it's just something you'll adapt to once you see it over time. Like my box to box trade, it's not a Michael thing. Michael might call a Viper, the Viper trade, or whatever he calls that. Or there's another one he calls this close to what we do. But it's not a box to box. I try to keep it as simple as I can. I've got a 4 trade plan rule that if you follow those 4 trade plans with all the rules that I've developed around them, you should be pretty safe. And I've got you 6 take profit models, and they're all adaptable to whatever you choose to use. So anyway, that's my advice to you. D still waiting short for me now. MNO. What's MNO again? No short for me. Oh, no. No short for me. MNO. I'm like, what's MNO? Is some secret word he's got? No short for me. Yes. It's just too choppy for me. I'm going to go look for something else somewhere else. You're sitting right at the top of that. You may be right there, Hadi. We may still just come back into, look at the hourly chart here. Let me just show you the hourly chart. Why I think this hourly chart is, Hadi was right. They're not finished with the what's going on above us here, right? We've already cleared out the high there, so I expected to see this just start marching through and back, eat through this bull trap here, right? We did wick through it. So now where we close, if we close below the 50% of that, I'm looking for a retest of this one here. This is a nice bigger version of what I look for. If this fails, if I lose the 50% here, look for a retest of this level. And if you lose that, then we're definitely coming back into 50% of the larger range here. Look for a retest of this old bull trap back here. Okay. So if this is not done here yet, we have not got above the next bull trap. We've wicked above it. We've quickly done a stop raid, and we've hit the mean threshold of this candle. So what you want to see now is, does this hold price? If I can get up on top of it, or does this hold you back? This bull trap now just says, yeah, I'll let you have your little liquidity run, but I'm not going to let you go any higher. I'm not going to let you take out those highs. Oh yeah, and they're literally that close. So you have to close above that one, and then through that, come back, tag it, and then run for rejection block, old highs. So right now we're watching to see this and this. These two are battling back and forth. This one's trying to hold. This one's blocking. So these two are your 2 blockers. They're trying to block you from going any higher. And you're already closed above it. So now that's the leverage you've got up on top of the shelf here. So you're a rock climber, right? You're climbing, you're trying to get up. These are the holes in the walls you're trying to get into. Get your fingers in there. Put your piton in there. Get your pieces in there, right? And you're finally get up on top of that ledge. Good. Now you're on top of it. Now you want to step on it and start pushing for the next ledge. You got your fingers up there. You got your rope in there. Now you want to hold that, get on top of it. You don't want that rope to snap, and then you go plummet. How's that for plummet to your death? You've just thrown the rope up there. So this is like a video game. There you are, the old school Pong. A little black, just there's a little white dot on the screen, man. You hit your rope, you're in the data point, you've laid your piece in there. Now you got to try and get yourself back up there. You're climbing. That's the ledge you're supporting on to get to the next level. Get up on top of that ledge and then start throwing a piece up here. How's that? That's your video game in your head. Makes trading a little more fun when you look at it like a video game. And you see the logic of throw the piece. You climb, climb, climb. You're free climbing up there. Lay your piece in. Lock it in there. Wrap back down. Get your next piece. And you're going to start running back up. See if you can get your next piece in here. Not how you would traditionally climb, but whatever. Abs, yes. How's your mom? Thank you very much for asking. She's doing much better this morning. Thank you very much for asking that, Abs. She had a little rough time there. She's only like 5'2", and she coughs her little heart out when she gets those. The water goes down the wrong hole, and she starts hacking and coughing. She's had this chest infection since Christmas or just after Christmas, and she's been coughing so bad, and she's probably pulled a muscle in between her ribs. But when she started complaining of having this jaw pain, I was like, oh shit, that could be cardiac. I can't see, I'm not there. I'm just looking at this little phone. I'm trying to look at her on the phone. It's like, shit, no, you better call the ambulance. So they came there, and then they found her blood pressure was like 206 or 205. I was like, okay, that's way too high. So go to the hospital now. So it was good that we called, because then you find out that there's a hidden thing. That's why they call high blood pressure the silent killer, my friends. You don't know you got it. It doesn't show you any symptoms. So she went to the hospital and sat there till 3:30 in the morning before my brother was like, look, we're waiting for blood work. Can you just call her? If you guys are not, she's just sitting in the waiting room for hours waiting for them to, they did all their tests. They did their ECGs. They obviously weren't too concerned about it. And then my brother's like, hey, look, she can sit at home and wait for them. She's only like 5 minutes away from the hospital from home. So if you don't see it as an emergent situation right now, I just want her to get some sleep. So they were like, yep, take her home. So she went home and got some decent sleep, and now she's doing better this morning. So yes, that's the whole nutshell story. So thanks for asking, Abs. Yes. I'm not sure I'm able to short it. Never tried. Oh yeah, okay. So if you can't short it, and usually that's with a brokerage firm that allows you to short as well as long, and you have to be able to watch the stock on a daily basis. So that's kind of the hard thing, because you can trade stocks on a 5-minute chart or a 15-minute chart and just trade it the same way we're trading this NASDAQ. It's just going to be a lot slower because there's not enough movement in it. Like, it doesn't move like this because there's a ton of liquidity in the market. So price moves quicker, but when you got a small stock, there's not a lot of liquidity in it. So I'm not going to say buyers and sellers. Though yeah, I want to say there's not enough people buying and selling it, because it's not about buyers and sellers. It's about offering it. If it's a small stock, it hasn't got a lot of value. So the algorithm's going to move a lot slower. So you're not going to see a lot of shift in there. I see. Is this all of his YT account? Is all of this his YT AC? I'm assuming that's YT account. I don't know what you mean by that. I don't know what you mean by that. Abs, yeah. And after the 15,000 hours of studying, still to be cautious. Market can and will rip your head off. It is so true, Abs. It'll destroy you. All the people that were like super hyped up on silver just got slammed last night. Slammed. If you weren't ready for that, you just lost a ton of money, or you just got, if you're in it long term, you don't care. But if you're like day trading that or sniping it like we like to do, like I took that account. Look at that. It's 287,000. Yesterday it was 260. So it's up $27,000 since yesterday. And I just smashed that in silver and gold yesterday. Silver was like super sweet. So if you see the setups, man, they're killer. So you can see how we're kind of banging around between these two right now, and we're just sitting there waiting for something. And I like the fact that we're kind of crouching here, like crouching tiger, ready to pounce on the highs. But if that just rolls over and that piton lets go, you're in a free fall. We're going to see a big drop down into here, and here. So look at the 50% of this range, pull your fib tool from here. Take it from here. That'll put us right in here. Right in that 50% puts you right in the middle of that candle. And what do we say about that candle? That one better hold price. It's going to go higher. Okay. So 50% of this small range here can retrace back into 50% or mid threshold of the mean threshold of that stop close candle right there on that little swing. Let me answer your questions here. Choppy, still watching. Thank you. You're welcome. 24,891 price level for NQ. Will price take out that low? 24,891. Will it take that out? I still see on the downside for 20. You said 24.8. Will it take out that low? What low are we talking about here? 24. I see 24.8. Oh, that one. Will it take that? We got a lot more work to get there, down there. I could still see 24, between 24,722 and 24,558, somewhere around there. I could see that as a big run, because we've got, if you guys are into trend lines, so the trend line right now is you draw from the base. Not that I'm not going to encourage you to do this, because I think it's bullshit, but if people like the trend lines, draw the trend line straight up from the bottom all the way through. You'll see that there's, I'll just show you. Not that I want to encourage this kind of trading, because I don't. If you're a trend line guru, I guarantee you the little trend line gurus are doing this right now. They're going like that. They're doing this stuff. So they're connecting these two and that one, and now we finally broke through on the downside. And if I remember how to do, because I started learning this stuff a long time ago, where you, as soon as you see it break through, come back to it, we could see a rollover. The trend line is broken to the downside. So if this doesn't trade back through this and come back and find support to go higher, this is your break-in trend line, unless your trend line people are doing this and they're skipping that one, going to that one, or they're saying, I'm form fitting this now. They're doing this. That thing slowly starts to flatten out. Like, I don't even know how people are drawing these anymore, but it used to be just like you find your connection between the first one and then the next one, and then watch it go from there, and it comes down, tags it, leaves, tags it, leaves, tags it, leaves, like that. Like, that's the objective. And then if it breaks a body through there, I think the objective there is to say, now it's hit it on the way back. That's your cue to start looking for a short or take a short there. It's already rated the liquidity above the market there. So anyway, that's how I vaguely remember trend lines, but I don't use those anymore anyway. So that's choose. If you're playing in here, man, you're playing baseball with a giant hole in the glove, and you got your glove like right in front of your face. Oh my goodness. Do you guys see that? Slavic ladies ready to relocate. You can't, nothing says human trafficking more than Slavic ladies looking to relocate. Wow. 24,891 on the daily. let me take a guess what box to box might be. Is it the consolidation that moves to another, or am I being presumptuous? It's not a consolidation to consolidation. No, absolutely not. So here's a box to box. Inside this range, there's no consolidation in here, unless you want to call those 3 candles a consolidation. There's no consolidation here. So this is a box premium. I look at a box to box is simply this, as simple as I can make it. Check the range that you're in. Look for the swing low. Look for the SIBI that creates the swing low, or just that is part of the swing low, or precedes the swing low. Look for that, and then look for the high, and look for the BISI that creates the high. So it's the opposing one, SIBI, BISI, right? It's the good, the bad, the yin, the yang, whatever you want to look at it. So you look for the BISI, and as soon as the BISI is closed above a high and retested, you look for the SIBI below it. Down here, this is a retest, an immediate rebalance. So again, if you want a real clean one, there's another one over here. So it's inside the larger, this range here is what you're looking for. So I look for the first one I can find inside the range. So from box to box, that's a box to box trade right there. You enter in short, you catch your short out there, you're done. If you want to aim for over here, great, you do your own thing. But that's my box to box trade, because that's an internal range liquidity hunt. It's a take profit model too. And then I look for a range extension continuation model. So the extension continuation is a retest of the low. There's the retest. That's the continuation model. So 4 models. That's all I need. All I need. And if you guys are using 20, 30 different models, you're using all 150 techniques that ICT teaches you, you're genius. You don't need them. You don't need them all. Michael's even told you that you don't need all this stuff. And yet everybody keeps going to his channel looking for a nugget of information. This is going to be the nugget that's going to change my trading. He has given you so many, he's giving you a treasure chest of gold, and people keep hunting for nuggets. Why? You're just hoping that he's going to give you something you're suddenly going to understand? It's there. He's giving you everything you need. Make do with what you got. Like, he could have given you just the core content and 2022 model. And that's all you need. That's all you need. Now, that's not telling you people who want to, what am I going to do with my mentorship stuff now that I'm finished with it? What am I going to do now? That's all I have to do. No. Just keep learning more and more and more until it starts to click inside your head. And once you see it, I promise you, you won't unsee it. It'll always be there. In every market you look at that creates candles, it's there all the time. So no, it's not a consolidation. Randy, options, but probably not the choice for a newbie or rookie. Options trading is difficult, and options will slam your ass. I was option trading 3 years ago. No. Yeah, 3-4 years ago, I was option trading. Did well on it. But I wasn't using this stuff. Now, if I use this stuff in option trading, it could be quite lucrative, because you can really leverage your account. But again, option trading is one of those things that if you're on a margin account and you trade options and you get it wrong and you're shorting a stock, oof. And they do a margin call, you get the phone call. You need to put in X amount of dollars in your account right now. Otherwise, we're liquefying all your assets. Okay. Yeah, it's not a place for beginners. Got all my positions closed out in silver yesterday. Glad I did. Now waiting for a good setup. Good for you, Vitaly. Good for you, buddy. You'll see that the low, you'll see that low on the daily, that price 24,891 in the middle of what Michael calls the phantom trend lines. Yeah. Yeah, I see it. If it does break that trend line, look for that level to trade back to, the midpoint of that. Michael used to teach that when the trend line phantom breaks, look for at least the midpoint of that trend line to trade back to. So I'd be looking for, I've got a number in here. I've got a line in here for some reason. It makes sense. If my trend line phantom breaks, I'm looking for 25,139. That's right just before that low. That's why I don't know if that low will get taken. But if you break that 25,139, then I'm looking for that 24,600 zone. You see that price imbalance down there on the daily? That price imbalance would be a target for me. And the 4 hour, we hit that price target on the 4 hour. Look, see that the 4 hour shows almost the same thing as the daily. Oh, I'll just show you. Why am I just telling you guys to look that up? Look at this. This is what I'm looking for. You see this down here? This is a price imbalance, not a volume imbalance. It's a price imbalance. We have buy side delivery and not a complete sell side delivery. So it's a price imbalance. Okay. So that price imbalance on the way down, see this one got balanced. And then we got that trend line happening. So if we break this trend line and come back down looking for half of it, you're looking for 50% of this. So I'm looking about 130, 139, somewhere in here, the midpoint of this candle. And if I break that on the downside, I'm hunting for this. I'm hunting for 24.4 area. So now you see this kind of price imbalance. Watch this on the 4 hour. See it right here? Same thing. Look, see how we came back and tagged it? And then quickly, as soon as we hit that yesterday and we started going up higher, I'm thinking, if we close above here, then I'm looking for a run into this premium box and this premium box. I'm looking for a retracement back into this range here. And then you can see that on a 1 hour chart. This immediate rebalance is treated like a fair value gap. And if you don't know anything about immediate rebalances, go to ICTindex.io. Get that, load it into your computer, and keep it. It is literally the AI for Michael. Any question you ask, don't ask me, ask the ICTindex.io, and it will give you word for word in Michael's voice, Michael's lectures. It will hunt through everything that Michael's ever said, and it will find all the references to the question that you ask, and it will give you the video reference, and it will give you the transcript of that message, and it will give you the, so even if you're blind, you can hear Michael talking about it again. Not that you could trade if you were blind, but what I'm saying, if you're hard of hearing, you should be able to read the text there, and it will give you everything you need. Okay, you can even turn on the CC footage as well. So anyway, that's the reversal right there. So your body breaks above it, you get into it. That's why I was calling long yesterday. That as soon as we break that high, I'm looking for this high to get broken on a close. That's the bull trap. Bull trap, let's go. Then I want to see a retest of the high. It breaks it right here. You come back, you test that high, and then we keep running higher for that objective. That's it. Down and dirty, simple and simple. Does that make sense? Do you guys get that? Does that make sense? Tell me it makes sense to you. Otherwise, I'm just babbling away here. What's a SIBI BISI? Haven't heard of that term before. Okay, so a SIBI, again, this is not my term, it's Michael's term. A SIBI is called, so you can write this down, SIBI. A SIBI is a sell side imbalance and a buy side inefficiency. So it's like this fair value gap you see right here. So sell side is only delivered on the sell side, and you'll see no wicks to come back and balance sell side delivery. So it leaves like little pockets, like Michael calls it, like a big paintbrush coming down really fast. It leaves little pockets of unpainted areas. So that's sell side imbalance, buy side inefficiency. There's inefficient delivery of buy side. So that's a SIBI. And a BISI is a buy side imbalance, sell side inefficiency. So you see, there's that little pace of a gap in here where you see no wicks, no body. That is a BISI. You see how the next one starts right at that candle's high and this candle's low. That's the next BISI. Okay. You must, if you're going to understand any of my 4 trading plans, you must understand those. They are essential for box-to-box trading. They are essential for inversions and fair value gap. You must understand those. And then you must understand 4 or 6 different areas inside that one candle, all the data points inside that candle, which makes it the most important in any candle. The 6 levels, you must understand them. 7 levels, actually. 1, 2, you could break it down into 4, 4, and 4. So you could be up to 12. I use 4, mostly just 3, 6, 3, 4, 5, 6, 7, 8. So you got to find those on every candle has those important points and how they get utilized. And you got to be so efficient at looking at those individual points inside each individual candle and know when they're being triggered and when they're not being triggered. What's a rejection block? If you don't understand what a rejection block is, go back to Michael's core content. Wick theory, you got to go back through Michael's wick stuff. That's some of his more recent stuff he's talked about with wicks. Wicks are more advanced stuff. Right now, stick to candles, stick to the SIBIs and BISIs, fair value gaps, inversions, price imbalances, volume imbalances, gaps. Those are critical, because when we stretch out our chart, they're hunting for these little inefficiencies. See that? Look at that right there. Little inefficiency. I want to see if it gets used. Once we've traded through it, does it get used to go lower and extend a range or extend a candle, right? They're very important. So hopefully that answers your question. What's the SIBI? I haven't heard of that before. Patience. Absolutely, that was for the $100 investment person, Randy. I don't know what was. If I said something for the $100 investment person, or you said that for the $100. Yes. Yes, I see. Does the market have a reason to drive price down so much, or is it targeting all the highs first? The algorithm, as I understand it, tends to offer price for buyers and sellers to move in. You buy it, and then they sell it, or they move price to the opposite end of the market. So if you're going to see, like in a consolidation, you'll typically see price go up and just run out the liquidity that's sitting, because most people, when they buy here, they want to short there. They want to put a stop loss just above that. So people who are shorting here are trying to run for people who are longing it here. So it's offered price all the way down to here. Then it just turned around because it's hit its data point. And now people are like loading on there and they're going long. And then these people are turning and it's coming back against those people. So it's offering price up here for would-be sellers, and then would-be buyers. It quickly swings up, takes them out, comes back, reloads more on, and then runs it deeper, offers it at a nice discount. And now it starts to run it back against all the people up here who wanted to hold it long, or sorry, hold it short. So it's just a constant moving of price, offering price to buyers and sellers at specific data points. And you've got to understand that it's specific data points that's driving it. It is not buyers and sellers. It's just offering price to you. And then the number of people that bought and sold there, it does not say right there, I've got 3,423 people. That's all I need. I'm sending it higher now. It is not the boardroom meeting that says, that's it. I'm done. We're going to shut this down. The market's going to turn right now. The boardroom meeting is over, and now we're sending it higher. That's not how it works. There's specific data points the algorithm's constantly reaching for. And once you see them, you'll seeing is believing, man. Don't just take my word for it. Michael's been talking about it for decades now. And people still think that it's buyers and sellers. They still think it's support and resistance levels. They still think trend lines and bull flags and all that shit means something. They still think Bollinger Bands and MACD convergences are what drive the market, and they give you a better eye of what the market, they don't. You've never seen me use a MACD. You've never seen me use trend lines. You've never seen me use EAs at all. And yet I can show you with pretty good precision at times. On a 1 minute chart, we're trading a NASDAQ on a 1 minute chart, people. And then we can jump to an hourly chart, and I can show you the same thing on any, and I've put up here almost 50 assets for you to see that it's not specific to one thing. It's an algorithm driving the market, not buyers and sellers, man. Now, you may look for conspiracy stuff like who's in charge of the algorithm. Central banks. They're the ones that are moving the market. And then sometimes you'll see manipulation. You'll say, well, that news event moved it. Sure, that's manipulation. That's somebody hitting their finger on the trigger, pulling it, making it go in the direction they need it to go. You'll usually see in a big news release like that, markets will quickly move to the nearest liquidity, clear it up, and then send it against that liquidity. You watch, typical news release, it'll go boom, it'll slam it up, clean that up, and then boom, you'll see it rip back down. It quickly gathers up its sellers, sends the price higher, gathers them up, and then sends it low. To all the people who want it to go higher, quickly slams back against them, so it cleans out both buyers and sellers and rips off with all your money. That's my idea. Is some of you may go, that's a lame explanation, but whatever. I'm not here to convince you. Yes, it does, Mark. Very choppy. Sibby busy. In other words, a fair value gap determined by a direction. Yeah, okay. I could go with that. It's a fair value gap, but don't forget, it's also, yeah, that was the definition of a SIBI. So if you use the definition of a SIBI and a BISI, you could add that to it if you want. If the direction helps you give that cleaner, then that's fine. I look at colors and I see a big open gap there. I go, that color candle, because I'm so used to seeing my colors this way, is a BISI, and a SIBI is very clear. They're very contrasting colors for me because I'm red-green colorblind. So I don't have red and green candles. So I'm making very interesting contrast against the white background. So it's nice and clean for me. So I see it. The wicks are black. Everything is clean and crisp. And I can see these little gaps and stuff like that. So the next thing you have to look for in terms of direction is also those. Because if I show you this, for example, I'd ask you this then. Who is asking that question? Gray? Mr. Gray, Mrs. Gray, whoever that is. If you have an inefficiency like a volume inefficiency. A volume inefficiency looks the same in both directions. So you have to ask yourself now, which one is the direction? So be careful about the definition of direction. Yes, I agree with you when it comes to SIBIs, but when you're looking at about fair value gaps, or sorry, volume imbalances, for example, let me give you some volume imbalances. And see this one right here? That's a volume imbalance, right? Volume imbalance, volume imbalance. They're the same thing. They're just wicks on both sides, right? But you can also, then you have to say, what direction is it going? So if you're using direction, then you say, that's still a volume imbalance, but you know it's in a downward swing. So when you make it this reverse, what I look for then is if I see a reversal, I treat this like a SIBI. Does that make sense? Because now I know it's going down. It's created this volume imbalance on the downward side. So when I break it on the upward side and come back and test it, that's like testing a SIBI reversal. So that's my reversal model right here. Tag, that's the long. And where am I aiming for? I'm aiming for the box down here. So this is box to box, right? So I go box to box. So that's the change. Model 1, model 2, box to box. Model 3 trades through it, comes back to it. Model 3, range extension, continuation. It didn't even give you your continuation, just went straight into a continuation. So you have 3 out of the 4 models you didn't even get. And this is the graded response. So on the 4th model, your graded response is, do I see a fair value gap above an old high? Yes, I do. Then you have an A+, it just leaves right away. A level is right there on the open to 25%. 50% is B. C is 75. D is a full close, and a fail is right through. And don't forget, you have to include this imbalance in your SIBI. Or sorry, you're busy here. And you can get those up into suspension candles, which Michael recently introduced, but we've been doing them all the time anyway. As soon as he introduced it, you have to add that piece on there. I don't care if you call this a suspension block. We're going to include the whole damn thing anyway, from there all the way down to there, because that includes this one, that includes this, that includes this, the whole thing. So that would be a giant suspension block, because it's a bunch of, it's broken up by little pieces of volume imbalance. Does that make sense? Interesting how we don't believe in volume driving the market, but we call that a volume imbalance, eh? So do you understand that, Vitali? That volume imbalances don't give you a direction, but they do if you look at where the volume imbalance occurs in the direction. So it's kind of an unwritten rule. Smart move, Hadid. This is too choppy. So anyway, I'm going to go over here and see if we can start finding something else. Oil. So we're still looking, so that we've come down into this candle here, or this target zone we were looking for here. Now we've hit it again, and now we're drilling through it. So I want to see us come back in to use this as support to head down into here now on an hourly basis. So that may be ways away yet. This may be a no trade day today. It's Thursday. The best part of today was earlier this morning at 3 o'clock. That's the London low. Look for the London low reversal. You'll see it right in there. And if you watch my time in a bottle video and you look at 3, you'll go, holy shit, he's right. That 3 o'clock's a killer. And even we got a friend named Mark. Marky Mark. We call it the Mark 3 trade because it's a 3 a.m. candle. He's capitalized on one specific part of the time in a bottle. I give you very specific times where you'll see turns occurring. And that's way more advanced time analysis than what Michael gives you. Because I give it to you right down into the seconds, all the way into a monthly candle. It's fractal. That's why I know it works. Gold, chop. That is a buzzsaw on an hourly level. Those wicks are dangerous. When you see that kind of stuff, stay away from that. Remember the go, no, go zone? This is a great example of the go, no, go zone. This is why, study this, you guys. Study this. When we were in here this morning and I told you about this go, no, go zone, I typed it in there and gave you my little, this is what I call a no-go zone. It's mine. It's nothing that, it's not specific to ICT, so don't think it's ICT stuff. Not that I'm trying to Like, hey, it's only me. Anyway, forget that. I don't care what you think there. So we're looking for this to break the zone. If it's a go, it goes here and then bounces back down for my run lower. If it's a no-go, it's a break through it, come back, retest it, and then go higher. That's the no-go. Got it? Go, no-go. Closes above it, comes back in and tests it. And here's an extra little piece I haven't shared with people before. It gives you a hint. If it's giving you an inclination, now it's not 100%, but it gives you an inclination. If this candle here, see how we literally closed on this SIBI, and we want to say, are we going to go higher? If we close above that SIBI and come back and tag it, that's our reversal model, right? We had wicked up, and you see it suddenly drive all the way up, and it wicks through. It's telling you something. It's saying, guess where I want to go? I violated this little data point, and I want to go, because there's that busy side right here. I'm running through that one, and I'm running through this one here, right? All these points you expect to see it hit it and quit it and just get the hell out of there, right? And it runs through. It kind of says, hey, guess where I want to go? Guess where I want to go? Oh, I think I'm going to fool you. I think I'm going to go back down. Nope. That data point, see that, why it's such a specific layer there, right there? Those data points are so critical. So when you see it come up into that consequent encroachment, you think, that's great. I'd love to see it pull back here now and start diving back down. Or I want to see it close just above here so I can get in on this for a long. It doesn't. It teases you, freezes on there, comes back up and drives all the way through, then comes back, and you go, I'm closing above it. No, look at that. I'm literally opening on the close of that. And we've had that debate before about whether or not you decide to take that long from there, because I've seen way too many times where it comes back up, creates some wicks, and then drives right back down through the bottom of it. But anyway, that's, for me, my rule is it must close above here, must have a close. It opens on it, runs through, then it says, now I've tipped my hat, dipped my toe in the water. Like Michael says, to me, the elephant is approaching the pool. He dips his toe in there and says, guess where I want to go? That's a nice warm pool. Come back down. Then the elephant jumps in the pool. There's your displacement idea. It runs above the no-go zone, comes back down, kicks off the wall, and the elephant's on a swim. Right from my premium box. Box to box. Does that make sense? Give me the thumbs up if you agree, disagree. But anyway, I kind of look for these things and say, is it giving me a hint here of where it wants to go? What is the 4 models you use for ICT? I've given them to you already. The reversal model, the internal range liquidity hunt model, the range extension model, and the range continuation model. They're not ICT models, but they are based on some ICT techniques. So you won't find them in ICT. So thank you for the breakdown. You're very welcome. Stick around, Gray Keys. You're going to see those 4 models all the time. That's all I trade. That's all I trade. The ICT index thing is incredible, isn't it? Hey, it's amazing. So that's literally the horse's mouth. You get it straight from the horse's mouth. Don't listen to me. Don't listen to anybody else when they're trying to give you their idea about what ICT stuff is. Go to the horse himself. That's literally like asking the AI, hey, Michael, answer this question for me. And you get his time and his explanation. Because he says, and it's ironic, now that I look back at it now, AI, because in 2016, we didn't hear about AI. It was just some science fiction thing, right? And Michael would always say in our videos, he'd say, hold on to your question. because I promise I will answer your question in time. Just hold it. And at the end of this, if your question hasn't been answered, then you can ask it. But I'm sure I will answer your question. So ironically, 8 years later, you start to see AIs now took all of Michael's stuff, and you ask it a question, it'll go find you the video, find you the exact time he said it, the perfect reference to it. It'll move the icon or the video right to the point where he answers that question with video and with audio and with text. You can't deny it, man. AI is a good thing there. And if Michael died tomorrow, you'll be able to talk to Michael forever. All the time that index is in there, you'll be able to ask Michael those questions anytime you want, and they're there. So whoever invented that, damn, that's a smart thing. That's a smart thing. And he gave it away for free. How blessed is that? What a generous person to put the time in to make that and to give it away for free. Wow. Wow. That's really nice. So I appreciate people who give it away for free. I'm giving my stuff away for free. You want to call it your own? I don't give a shit. It works for me. If it works for you, I'm happy for you. Share it. Don't go sell it to other people. Give it away for free. I don't get why people have to sell everything all the time. Why can't you? If it works for you, then why should you have to sell it? I get it. There are people out there that are lazy and want it spelt out for them. But it's free. It's free. Put the time in. People are lazy though. They just want to give it. They just want you to spoon feed it to them. They just want you to spoon feed it to them. Well, you get spoon fed every day. Come here, you'll see it. I'll give you signals. If you're looking for free signals, you'll get signals. If you don't want to do the work, it's right there. I'll give you tons of them. Every day you get free signals. Put the work in though. I can feed you for a day or a lifetime. Which should you choose? The carrot or the stick, my friends? The carrot or the stick? Nice little change in direction reversal model. See how this changes right here? Goes above, then it changes below. I'd be out right there. See how it changed above again? Then came back into it and then went higher. So goes down, goes up, goes down, goes up. So you wait. So it comes all the way up in it and you wait and you wait and you go, oh, look, it is going up. Who cares? You gave it one chance. Unless you go like this, you put your entry in here, your stop loss goes there, and you wait. If your stop loss gets taken, you're out of the trade. Then you're good. You would have caught that whole run up there. Again, you have to develop the rules around your stuff. I've got my rule. If I trade back through it, I'm done. And if it trades back through it again on the other side, I don't just keep chasing it because you can get beat up in here, right? And in this case, had you chased it, you could catch your money back. But then there's times where it could just go sideways and kick this little bear flag, as they call it, back and forth, chopping the shit out of you. So just wait. There was no candle immediately to the left. It would have been great if there was a little bull candle here. I could have got on top of it and used it as support to go higher. Unfortunately, it's sitting way up here. So there's the fair value gap. So I have to look for this one. That one gets broken. A bunch of finally gets broken here. It runs higher and I go, I'm going to wait for this one to get taken then, because then I have to say to myself, where am I? Ask yourself this question. Where am I in? You have to include that little imbalance down here as well. See that? Stretch it out. You'll see it sitting right there. Okay. So in the grand scheme of things, you have to ask yourself this. You can take it from here, 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 or here. Now, what I do is I say, in this run up higher, I'm looking for the BISI. Remember I said you look for the SIBI down here and the BISI above it for a box-to-box trade? So then you start to hunt inside here and say, where's the BISI? Where's the BISI? That's a SIBI. There is, and then stretch it out because it could be a little imbalance up there. You get up into, there's one here, but there's one here, and there's one right here. Because they're all part of this larger range, right? So you have to use both sides. Look for your BISIs, because the BISIs are going to be on the side coming up, right? So it's either going to be here or your premium one. So P1 goes all the way up to here. So there to there. P2 is in here and P3 is in here. So P2. You might as well include the whole thing because that's they're overlapping each other there, right? This one and that one. So just take it from there all the way to there. So look at that level right there. Look at how it hit that data point. Tell me that's some random shit there. Most people who look at this chart look at this stuff and they go, why did it stop there? Look, there's just a mess here. But you find the actual thing that I'm looking for. I cut through all the candles, all this stuff. People are hunting SIBIs on this side and stuff. Right here. That's the whole chunk. And look at those data points. Tell me that's a boardroom meeting. Tell me that's buyers and sellers coming in that froze it right there and then sent it back down. Data points, data points. Know where the data points are, man? And that's your target. So that's your premium box, right? So we enter it. So if I don't get this one, because you get beat up in it, you say, all right, I'm down. Let's say you took a loss there. You say, all right, I'm going to wait for this SIBI to get broken to the upside. If I pull my fib tool from low to high, I want to be in below 50%. Right there. There's 50%. There's my SIBI. It actually ends. Oops. It actually ends. Oh, it's right up there. I have to include that piece too. So 50% is here. I have to be in below 50. So as soon as it drops in right there, you can get your long. We've traded above this one here. This one here, you traded above it. As soon as you come back into it, our macro is just beginning now. So it trades back into the consequent encroachment of this suspension block. See, there's an imbalance here. There's an imbalance here, and there's an imbalance there. And there's a fair value gap in between it, the SIBI here, right? That's called a suspension block, as Michael would call a suspension block, but we're just going to include it anyway. Call it what you will. I don't care. Look at the 50%. Look at that mean threshold piece there. So as soon as you trade through that, that activates it. Now it says, I'm going to go long on this. And in order for me to go long, I have to get back to a discount for me to buy that. You may decide, hey, look, I'm too close to that bull trap to risk this. That's fine. You may say, nope, it's got to be back down here in a discount. If you get your discount, you see my stop loss is going to go just below the low here. And as soon as I bust out above that high, or take out this high, the most immediate high, I pay myself and move to break even. That's my rule. So you get here, as soon as it takes out the next high right there, pay yourself right there, move your stop loss to break even, zero stress trade now. Let the rest run. For premium box, pay yourself. Pay yourself 1, 2, 3. That's your layered response out. So you've paid yourself right there. And so you've got entry in here and an exit right on precision right now. And you'll let the rest ride. If you've got a little piece on there, we'll push for the upside one here. If you can take a piece off there, you're done. You're right up in the premium portion of this, right? You're up at 88%. So you're already done. And if you reach the highs and you don't reach the highs and it reverses on you and comes all the way back down, that's greed, man. You miss the data points. You decide whether or not you want to take the trade rule there. It's up to you. You'll develop your own rules. You'll find where your flexibility is, how flexible you are with the market, and inflexible you are with your rules. As Russell would say, be flexible with the market and inflexible with your rules. Because if it's the other way around, you're going to get shot. You're going to get put up against the fence and shot. Can you send a link for the ICT index, please? No, but I can do this. Highlight that, copy it, paste it into the search bar or into the address bar at the top of your screen. Click that, and there you go. You'll have it. So anyway, that's gold. That little gold entry there. Silver. At 9 o'clock this morning. Consolidation. Wait for the consolidation. We get a break above the consolidation. And then we want to see it come back into the consolidation. So you see it pops up above this one, but it also pops up against the next bull trap up here. There's little tiny bull traps. Body breaks above it, comes back to it, and we take it long. If you're waiting for this one, you didn't get it. It was this little guy right here. And then the next one's there. You wait for a body to get above that right there, and you want to come back inside the midpoint of it. You don't want to see it trade below that. Your swing points here. There's a little imbalance right there. Trade through it. Come back into that imbalance right there perfectly. You see that data point at 88985. Is that a data point? Damn right it is. Stretch it out, my friends. You'll see. 88985. There's the mean threshold. Right there. You've got to use these guys. You take this one here to that one there. Right there. Right into it. Bam. Goes higher. It's nice. Anyway. That's silver. Silver gives you a change in direction. We take out these highs here. And you get back into, do we tag this old high back here? An old low? Nope. So we get highs taken. Always keep searching for this. Every time you make a new high, if you take out a high, you go, okay, I've got an imbalance right here. If I trade back below that, I'm going lower. It doesn't. It keeps going higher. That's good. Then you see this one, you go, if I trade back through that and we trade back into it, I'm going short. There. Trades through it, back into it, you're going short. And you can trade take profit model 3 all the way down to when I get a reversal. Here's how the models overlap. There's only 13 of you in here to see this. Whatever. When you have these 4 models will literally dovetail themselves. When one fails, the other one's already kicking in to go in the opposite direction. For example, here's your reversal model. We have and you'll hear how the take profit models overlap as well. We are in a model 1 reversal here, internal range liquidity hunt. We start clearing out all this liquidity. I wait for this body to break on the downside, this breaker. It breaks on the downside. I come back to the breaker. That's an extension model. Sorry, this is the extension right here. Did we take out the low yet? No. It literally opened and closed on it. This one here closes below. This one opens, just gives a little kiss, and we get a range extension model. Then the continuation model is we come back into the breaker, and then we get extension. That's all 4 models right there. And now here's the cool thing. Take profit model 3 is, as soon as you enter into that, I'm looking for any opportunity now to see a reversal model, which is take profit model 3. As soon as the reversal model occurs, in other words, I see a SIBI broken to the upside, I know I'm on the wrong side of this trade. I can close that trade off and go long. Watch. There's the SIBI. If we see a body trade above that, it doesn't trade it here. You're still in short. Then all of a sudden it goes, boom, displaces. And look what happens. So now our take profit model 3 kicks in right there. Let me make this clear so you guys can see it. My take profit model 3 model right there. As soon as it closes, you say, I'm out of my trade. So my short is out right here. And notice what it says now. I've got a new low. I've got a SIBI. And as soon as I trade back into that SIBI, I'm going into take profit or a model number or reversal model, internal range liquidity hunt. Those two models. So break in, they dovetail each other. That short is now turning into this long. So take profit model 3, BISI to SIBI. Also, SIBI should create a new low, reversal. Now you go into the new change in direction and you trade both directions. That's how you catch it quick and easy, man. Breaks above, comes back inside, gives you your opportunity to get long. Off you go. If you didn't see this and you say, I missed out on it, then you just simply look for this lows created. You take out this little swing point here. It doesn't take that one out. Oh, yes, it does. Right there. So this new low is created. We don't see a SIBI except right here. There's a little guy right there. You stretch it right out. You'll see it sitting right in there. See it? And like I've told you before, if you get one candle that rips through one and it rips through the next data point, you go to the last data point that it hit as the area of sensitivity. So it rips all the way through it. Forget this one. This one is the next sensitive one. It does not trade above that one. It trades above this one. So we're looking at that and that are kind of dovetailed. They're inside each other here, right there. This guy's buried inside that one. So as soon as it closes above, but doesn't take that one out, comes all the way back, hits it, hits this one, that one, whatever one you want, and then boom, takes off. We move into internal range liquidity hunt. And now I'm looking for what? I trace back and I look for my BISI, and I go, where's my box to box trade? You guys are going to see this. You're going to be like, holy shit, this is insane. So there you go. Boom, you hit it. So there's your entrance. There's your first scale out. Then we look to see if this mean threshold of this candle holds price. Look at it. Mean threshold. Look at that. Right there. Mean threshold holds price back and then sends it back through here again. Gives you a little poke through. Says, guess where I want to go? Into the mean threshold of that candle again, because it's a loose swing point. It comes back into the mean threshold, holds it, and then boop, pops through. Now we're looking for an extension model. Now I'm expecting to see that go above here. So you pay yourself at rejection blocks, because if it reverses and comes back through here, rejection blocks all you get. Always pay yourself there instead of risking the high. So many times you guys are going to see that come up and get rejected off the rejection block. Hence the appropriately named or app name. Sweet. Thanks. 10:35, 1 a.m. inversion fair value gap. I don't know what one you're talking about there, Hans, but you're probably on NQ still. Do you see how those models literally caught you in, caught you out, caught you in, caught you out, caught you in? They're 4 models that kind of overlap. They give you the opportunity to trade the reversals, internal range liquidity, extension, and then the continuation. You get all 4 of those. You understand those and all the rules that are associated with them. That's all you need. 4 models, man. Or just trade one. Just be an internal range liquidity hunter. That's it. Here's your simplest one. Internal range liquidity hunter with take profit model 1. Make your career off of that. That's it. Get really good at that model and do nothing else. Do nothing else. See how the rejection. This is a great example. Look at that. I told you, I just gave you this. I said, pay yourself at rejection blocks because you may not get the high. If it closes back through here, we're coming back inside the range. Look at that. How beautiful is that? It came right up into this wick, right into the rejection block, did not take out the high. We're looking for range extension. You know when it fails, when this lets go on the downside, and it just did. So you're not getting your range extension. That's not to say your range extension fails. You know the rules behind when it fails and how to get back in sync with the market. This is on how to stay on the horse. This is when it's bucking and it's throwing, it's spinning, it's turning, trying to throw you off of its back. If you're aware of this and you pay yourself there, you didn't get punished here because you paid yourself at the rejection block. If you did get punished there, you got greedy. You did not follow the rule. And that's the rule you have to establish, and you have to stick by them. Instead of saying, Darren, your stupid rules or your extension rule bullshit didn't work. Yeah, well, if you would have followed the rules, you would have been safe and you wouldn't have been hurt. Right? So, for example, you traded through here. You say, great, now I'm looking for my extension rule. I'm trading. I'm going to move right there. I'm going to pay myself right there. Is that worth me taking that trade if it's that close? Because don't forget, these can be way down here. They could be a long way away. In this case, it's so close. You say to yourself, I'm going to pay my rule is I'm going to pay myself at that rejection block right there. So it comes in, you layer in 3 buys there. It goes up to rejection block. You hit it. You move to break even. You say, now I want to see that leave. It's come back and tagged this. It's done its thing. It's got to leave. It goes boop and tags you out. You go, ooh, okay. Now I'm going to wait for the high to get broken before I'm not looking for an extension or a continuation rule now. And you don't get it. And it comes back through. You're already out because you moved your stop loss according to the rule. It's not a micro rule. That's just one of my rules. That's how I kind of cover my ass and protect your back end right away. If you're expecting those data points to hold, they should hold. If they don't, then you're always safe, man. Try to get safe. Try to get safe. That was on NQ. Okay, thanks, Hans. So now that it's broke through this level, we look for a market structure shift. It does right here. And does it come back and tag that low? Right there. Boop. Literally opens on it, tags it, comes lower. So now we don't see a SIBI inside here. So I'm hunting for a SIBI down here. There's discount 1. There's D1, D2. So you're already into D1. You've filled D1 to the pip. Now I want to see if this is used as support to roll over and come down for D2. And it's in the middle of the range, so you decide whether or not that's important for you to start gambling in this limbo zone right here. Anything around 50% is all limbo. It can turn on you any direction, so you got to be careful there. Now, does anybody have a stock or something they want me to look at? I'm happy to do that for you. Kind of give you a quick, we had these ones over here the other day. That was we're looking for that retest of this. Didn't get it. So if you don't get the range extension rule, so here, see how you trade through this thing? And I say, now I want to see this get retested so I can go lower. It doesn't retest it. So you go, all right. Now I look for the continuation model. If the extension model doesn't give you your entry, I look for let me get my C crate out of here. I look for my continuation model. The continuation model is any run back to the low, all the way back into this fair value gap / almost suspension block here. So body trades through the low. Now, if we come back into this wick, there's our extension model or our continuation model. I keep saying that over and again. It's our continuation model. So you get, and then once you get in, you entered in here, you had a slight little drawdown, and you go, now, as soon as it breaks this low, right there, as soon as it breaks that low, I pay myself, I move my stop loss to break even, because it should keep going. If it doesn't and comes back, then it's not acting the way you want it to act. You must act, it must demand from the price, from the market. Be very rigid with your rules. And then if it leaves, if its intention is to leave right away, then it does. It leaves. And now you say, I'm going to switch to take profit model 3, for example. As soon as I see a reversal, I am going to close my short trade out and then go long, because that is my indication for, sorry, it's a bit of a in your ear, sorry about that. Then it's my indication for a long. So here, watch this. So you got in here, I'm looking for here. There's our first SIBI, and I go, if it trades back through there on a close, I'm looking for this bull trap to let go, to go higher. So it trades all the way up into the consequent encroachment of that, does not trade through it, and keeps going lower. You go, great. Now, where do you put your stop loss? So if your stop loss is sitting up here, because you know that's the bull trap. If the bull trap gets broken, we know we're going higher. So that's a follow-up rule. So the rules dovetail each other. The rules are designed to follow and protect you along the way, because you know if you've got a little more flexibility in this, you know if the bull trap gets taken to the upside on a close, we know we're heading in the opposite direction. So we're staying on the horse. Take profit model 3. This SIBI here finds it does not, we do not trade through it. So my stop loss is sitting here. I'm already at break even. The moment I got through here, I paid myself there. I'm at break even. And now as soon as that goes down here, you go, great, hold, stop loss moves to here. Then it goes, boom, creates another one. And you go, ooh, sweet, right there. Now the stop loss goes from here to here, because that is the bull trap that we are looking for if this is the swing for it to trade through. I'm expecting it to go higher, right? So there's the SIBI. It goes lower and you go, oh, look, it creates another one. I move my stop loss from there or from there to here. And I go, as soon as I see this break here, because I'm in take profit model 3, take profit model 3, when it ends, it's the beginning of take my trade model 1. There, breaks through. Trade model 1. I close my take profit model 3 out, because we've now got this SIBI traded through. I trade back into it, and I start going higher. Now I'm going long, putting my stop loss down here, and as soon as I see the bull trap get broken to the upside, it does right here, there's confirmation. It comes back and tags it. I want to go higher. Keep in mind, you've got a SIBI right here, or sorry, a BISI with a big gap in it. We've come back, filled that. Now I expect to see that go higher. So now your stop loss goes from, you've gone out of your short trade, you're going into a long trade. You got your confirmation right here, broke that high, pay yourself at that high right there. You pay yourself the high, move your stop loss now to break even. It comes back, tags it a couple of times. The top of the box does not take your entry out. You go higher, you take out that high, pay yourself at the next high, and you say, I don't want to see it get back through here on a close. If it closes back through there, it's mean threshold. On a close, not a wick, on a close, I'm out of the trade. But I'm long now. Okay, so then you go dirt, and now we're sitting at the present candle. That's in some OKLO. I don't even know what they are. Somebody gave me this the other day. But that's the short and the long. Using my take profit model 1, 2, and 3. I've got 6 now. But there's the take profit models. And the reversal and model 1, model 2. You didn't get model 1. You didn't get model 2. You didn't get model 3, but you got model 4. For the extension. That's just an aggression. When you see that happening, you only get model 4, that's an aggressive drop down. And you got to be patient enough to wait for that. Say, oh, these damn models didn't work. I didn't catch any of that. Go down to the lower time frames then. So take this and go down to a 15-minute chart. There's the reversal right there. You trade all the way through it. Do you get a chance to get in on it? Nope. Look for SIBI over here. It's right here. It closed. There's that rule again, right? See how it stops on it, opens on it, keeps going lower? You don't get an opportunity. So then you look for the breaker right here, trades through it, comes back to the breaker, and then you get to go short from there. So your 15-minute starts here. So go to a 5-minute chart. See, can I see it on a 5-minute chart? And that was up right there. So right here, you'll see it there on a 5-minute chart. This is why whoever asked me that, whether it was Gray or I, a God guy, if you're looking for $100, if you're trading that one stock on a 5-minute chart, here's the swing high taken out. We swept through that and we look for a body to close below this low. This low. Trade through it right there. Open. Boop. At 104.46. Short. Aim for gap. I look right here on the 5-minute chart. I'd be looking for 103.17. So look for 103.17, and then I'm looking over here at 102.58. 103.17 right there. Literally opens and closes on it. And 102.18 was it? So there's 102.16, 102.18. There's your entry, and then you're short from there. That's a 5-minute. So you can trade it internal, like even on a 5-minute chart. A stock, I have no idea what the hell that stock is. But anyway, that, my friends, is how you do that. That's just using the 4 model rule. You got it? You got it? You understand it? That's some crazy foreign stock. I have no idea what OKLO is. I think it was somebody mentioned it was a no. I don't know if it was one of those AI generator places. AI farms. So Mara Holdings, don't know who Mara Holdings is. I don't recommend Mara Holdings. This is just something that somebody pointed out, so I'm more than happy to kind of give it my little 5-cent analysis. So we have a swing with a SIBI, or not a SIBI. This is a volume imbalance. We close through the volume imbalance. Now this becomes active, and when I look to the candle to the left, this is actually the candle to the left, but I look for this guy here now. That's a nice SIBI. Is there one there? Let me stretch this out. Let me have a good look here. Nope, nothing there. But there is something right here. So it goes all the way up to there. Okay. So I've got nothing here. We run through. And you say to yourself, if I take out the first bull candle to the left, that's my... and I see that candle go ripping through, and it takes out that one, I look for a retest of this candle. And if I go through the mean threshold, you're actually coming back into that imbalance. But that's the retest. If I get a body close above this, this becomes the retest. See how we opened up above it? So if it keeps going higher, I look for the next retest below it. So in here, this candle, and we go through, if we go through the mean threshold of that candle, which we do, we opened on it here, we opened right back on this guy here. So this is unfortunately one of those ones where you go, I want to see that mean threshold of that candle because we closed above it. I want to see the mean threshold of that hold. If it doesn't, then I have to go back to the most recent one here and or here. So if it fails, it literally gapped down here and started here. So you have to ask yourself, where am I going to put my stop loss? It would have to be below all that junk there. Now, if it runs back above the high, which is right here, runs back above the high, you pay yourself and move your stop loss now to break even. So from down here, you pay yourself a bit here, move to break even. It shouldn't come back down into here now. So pay for the trade, plus give yourself a little bit of profit, and not let it run. The problem with greed is that once you pay your, and it takes off like that, you go, if I would have left it alone, I would still have more of my stock in there. That's greedy thinking, man. That's not algorithmic thinking. That's greedy thinking. Wait. That's like saying, I've missed the only opportunity I'm ever going to have. That's just the wrong way to think. And what you're targeting is, look at all this imbalances in here. It's a sloppy, sloppy place to get your profits. So you have to ask yourself, pull your fib tool, use your fib tool to trade that. For example, as soon as this trade went in and you went long, pay yourself at 50% or pay yourself at the high. Again, you develop your own rules, but my rule is pay myself at the high, get my 50%, move yourself to break even. Now you're like sitting in a stock that you've paid yourself for, your stop loss is tight. Now, a lot of banks, like if you're investing, like investment brokers, or not broker, but your bank, sometimes they won't let you put a stop loss in. You got to be willing to say, I'm willing to take X percentage of a loss. So you can't just grab a line here and slide it up and actively trade your account. You have to go in and put a price in there all the time. With banks, you don't have the convenience. And if you have a bank that allows you to do that, then great. I just know Royal Bank doesn't give you that opportunity, but even in their investors section. So anyway, my point is here, you get to 50%. Now you move your stop loss to break even plus the cost of the trade. You've paid yourself half. Take another 10% off at 62%. And then when it comes, and then you move your stop loss here to 50, you're out of that trade now. Done. Your trade is over. You've broke the premium spot. You've got a potential place for a market reversal. You've got a new price imbalance going on here, and we've wicked through it. If this body today closes through that level, you've got to change in direction. And if it comes all the way back down now, you're going to wish you used my rules for 50, 62% for take profit model 1 on a stock. And if it takes off, you go, who cares? I just wait for the premium box to get hit. If it does come back into here, I can catch my long off of here as long as it doesn't break 50% of this. I'm all right with that. So my stop loss is going to go right there. If it breaks 50%, I'm out. You take a small loss and you wait for a cleaner setup or find a different stock. Wait for the premium box to get, and then you start doing your extension continuation rule, knowing that you've got bull traps sitting for you up here. And your last premium box is right here. That whole suspension block. You have to go all the way to here. That's your suspension block, and you're already in it already. That's the premium. So that rolls over now. You're going to wish you used my rules, because my take profit model 1 is the safest internal range liquidity. So if you're an internal range liquidity trader, you've traded, you're done, you're in and out of that stock. You go, here's my next stock. I want to look for another opportunity to see a reversal and trade a small range. Snatch my money, move to the sidelines. Does that make sense? Does that make sense to you guys? There's only 13 of you there. I'm pouring my heart out here on this analysis stuff. There's hardly anyone even in here. But thank you for those of you who have stuck around and who's listening to me babble. I hope you're getting something from this. It's good for me, even if you're not listening. Good for me to keep reviewing it in my head. That's got to hold right now. If that's going to go higher, got to change the direction. You've already eaten through that guy. You've come back into him, wicked up, rejection block, and now we're dropping. So you want to see this hold now. 50% of that wick is all you want to see that come down to. I don't even want to see that come down there. This candle's not even valid yet. Doesn't look good. Overall bearish. That little retracement didn't even give you 50%. So there's some weakness there. That bull trap's holding price and dropping it back down. If you close below here at 94.43, we're going lower. You don't want to see that give up price now. Not that you guys are in that one. I don't even know who was that talked about that. Mr. Disney, what's Disney up to? It hasn't taken off on us, has it? What we had here? January 15th, yeah. Disney's a little chop. I want to see Disney get back down in here. Come on down, Disney. Look at these big open holes down here in Disney. You made $80 Disney stock. I'll take that any day of the week. $80 running up to $124. That's a 50% return on your money. 50%. Half of 50 or half of 80 is 40. $40 jump. That'll give you 50% return. And that was in a matter of how many days? May 6th to July 7th. May, June, July. 3 months. You make 50% on your money. Move to the sidelines. Enjoy your benefits. Go sit on a beach. You catch the reversal. Look at that. Right up into it. Oh, delish. Yes, thanks for everything, D. You're welcome, Abs, man. You're welcome, buddy. Lucas, always appreciate it, Darren. Pleasure, buddy. My pleasure. It's nice I got people in here that are actually like listening and they see the logic of it. And I try to explain the logic of everything I'm looking at. Any analysis that I give you on a market, if you don't agree with it, please say, man, I'm all for a challenge. I'm all for looking at going, you know what? That's a good point. I'm totally wrong on that one. I love admitting if I'm wrong. It's okay. It means I get to learn something. There's no such thing as failure, my friends. Only feedback. Only feedback. The only true way to succeed is know that failures aren't that. The moment you call a failure, it means you have to attach a lot of emotional shit to it. Instead of going, oh, I've just found out the way not to go. Now it's given me a direction to say, I need to go in the other direction. I need to go in a new direction. Ooh, good feedback. It's good feedback. It's not failure. It just gives you a point of, this is the direction you need to go. It ain't in this direction. It's somewhere else. It's like a fail-safe, right? When a fail saves you, that's why I call it a fail-safe. It's a fail-safe. It failed and it kept you safe. So it's just feedback. A fail-safe tells me when I trade through it and it's wrong, my fail-safe, before my stop loss even gets taken, my fail-safe is a critical factor. Michael never has talked about a fail-safe. You have a stop loss, that's it. If it gets taken, you're out. I'm teaching you, if you see detail and you demand price action, your fail-safe gets broken. I guarantee you 9 times out of 10, your stop loss is going to get taken because your analysis of the market and those data points are so precise. If they fail, and you know that if that fails, it's coming lower, it's going to take your stop loss. Take your stop out. Close your trade out. Fail safe. It keeps you safe. So now you're only going to take a small loss versus the full 2% or 1% you're risking for the trade. Does that make sense? I hope so. Anyway, I've got a couple more minutes and I'm talking your ears off all day. Oh, look at that. You guys want to play in that? Remember when we opened up and said at 9 o'clock, 9:30, we said, that's just, I don't want to play in that environment. Look at those wicks. They're designed to saw you up. There's nothing delicious there at all. Look at this. This is the only, and even that, this wick right here, a destructive wick, I might add. Look how much it would have squeezed you. If I would have just said, I'm going to take this low, this swing here, even though I have no SIBI, and you want to be balls and say, I'm going to take the first bullish candle to the left of the swing. The moment we have a candle close above it, right there, I'm going to take that return back into this candle. I'm going to take that long. So it goes boof. And you watch this wick. This is a big black or a big blue candle going down, and it eats through the mean threshold, the bottom. It eats through half the wick. It eats through all these data points. It eats through the whole damn candle. And you go, oh my God, it's gone into the rejection block. And if your stop loss was sitting there, look at the squeeze. How many of you, when they saw that big down candle, would have think, oh, I'm losing, and took your trade off, and then all of a sudden it went back and then ripped in that direction, and you get super angry at yourself. Right? That is an ugly candle. Unless you're disciplined enough to say, I'm put my stop loss there, I don't have a fail safe. If you didn't have a fail safe and you had a stop loss, it came down and squeezed you. You see that sweat running down the side of your face, and then all of a sudden it leaves and you go, oh my goodness, that literally came to the front door. The big bad wolf came, knocked on the door. I smell you in there, little piggy, and then leaves because your house is made of bricks. You're solid. That would have I would have been like, nope, it's violated my rule. Even if I was one tick below that low, would have taken my stop loss out. 50% of that thing, if you see it eating through the 50% of this wick, yeah, you're done. All those data points got chewed up on that one wick and then went in the direction you wanted it to go. Ugly price action. Not acting. That is not acting the way you want it to act. That is not a typical wick candle. We want to see precision. Come back, tag it with precision, and then go boof and leave. Because that's when you start to become inflexible with your rules. And flexible with the market. If you get too flexible and all you're giving up all your rules for that, and then you got paid, that just taught you to be very inflexible with your rules. For me, that would have taken me out for sure, but I knew you would have taken the loss. And look at this. See this? Body trades through it right here, right there. Body trades through it, come back to it. Now you want to see it leave. Look, now it's going back down below it. You go, now it's closed below it, above it, below it, and then it closed above it again. And you go, oh, I'm going to go in long, and I'm going to go short. I'm going to go long. Damn it, I'm going to go short. Goes down a little bit, then turns back against you and get long again. That is not acting the way you want it to act. Move to this. And you saw that from all the shit that it was doing this morning. Clean price action's coming, folks. You got to be prepared to wait for it. That's a super... If you made money on there today, good for you. But I guarantee it wasn't made by precision entries. You got some squeeze going on. You got to be really disciplined to hold on to your stop loss if you made money today in that. Almost done. Hit my upside target on ES. Oh, you did get your ES target. Is ES cleaner? Look at that opening range, regular trading hour gap. That's huge. You hit your upside target. You know, it's at 712 or something like that. Well, I have mine sitting up here, the regular or the new day opening gap. But I don't even see anything here, Hadi. You see, I see no entry there. You saw this was just an A+ leave, and it's already in the premium portion, so I wouldn't have touched it anyway. So then you wait for this to go above here, and if that's your target, then it's not worth running for. And it closed above the premium box right here. Came back, tagged your premium box. That's all I would have got out of that. From there, off the premium. That's the range extension rule. You're looking for continuation. You get a reversal. And the short, you don't even get a reversal off that. Not clean at all. That's the only entry right there for hitting the objective. And that's paying a premium to hopefully drive for another premium. But if you got it today, Eddie, good for you, man. That's some patience. Oh, I'm almost done too. I'm talking myself to death here. You're done. Have a great day. See you all tomorrow. See you later, Hadi. Thank you, Darren. You're very welcome, my friend. Good for you. So wait for this to break to the upside and then catch that to go along. And again, look at that chop. It's a no play day for me. Thanks for today, Darren. I hope your mom gets better. Heart, heart, heart. See you tomorrow. Thanks, Hans. Thanks, buddy. Appreciate it. And she says thank you very much, too, for all the kind words you guys have been saying. Your thoughts and prayers. She really appreciates that. She told me to tell you guys that. Well, I think that's going to be it for me. I'll quickly kind of scan through, see if I can see anything else here that's worth playing. No, thank you. Nope. Bitcoin. Draw my little box. Remember these guys down here? Oh, look. Is that precision? We drew that one over here. Remember? We extended out. Now you may say to yourself, look, that was yesterday. That was 2 days ago. And is that a precise data point level? Do you think people are stopping price at that level? Or is that a data point? The sooner you guys get on board with an algorithm, the faster your growth will be. Premium box. Hit it. Now you're back inside this range here. And the only other data point that you can really reach for in terms of a discount. So let's say, how many people we got? 10 people in here. Let's say you go like this and you say, I don't have it. What if you don't have a SIBI down here, Darren? Well, you do. It's right here. It's this guy. But let's say that guy didn't exist. And this is the range I'm dealing with. I've got the premium, but I don't have a discount. So that you take your 50% right here and you say, what is below what candle? Remember I was telling you there's like 8 different levels on a candle you have to look for. What candle supports a run higher? We have these 2 candles right here. That's 50%. These 2 candles are what's referred to as a breaker. They make the break. They break themselves, right? If you're looking at it from a larger perspective, it's a mitigation block because it doesn't take out an old high. But this is a swing point right here. That's a swing. You take the very last candle if you want. That one becomes significant for me. But Michael says add 2, so take the 2. They literally become the high. We take out the high. As soon as it comes back into 50% or less, this candle's high, half of its wick, and its open are the level I look for to see that run higher. And it's below the 50%, so you don't want to see that level right there get traded to or traded through. Here's our first presentation, fair value gap on a 15-minute. It comes back, tags it, and now you want to see it leave. So what are we aiming for? Rejection block, half the wick, old high, mean threshold. Those are my data points I'd be looking for. And see how it's waffling here right now at 15 minutes. Stop loss to break even. I don't even want to see it come back and tag this again. Though it can tag here and here in the middle and fulfill and still go higher. If it's not acting quick enough, I'm getting out, especially getting closer to lunch hour here. You can go sideways. You can come all the way back down again. And you're sitting in the middle of that range. That's that no-fly zone. If you're looking at this small range right here right now, look where we are in the no-fly zone. 50% sitting right here. I want premium and leave. Go, go, go. Don't know if that makes any sense, but whatever. What do we got? Gold. Gold's got a change in direction on us now. We've run that high out. So we've got our range extension. This is the continuation model. See how we got the range extension all in one candle? Then it comes back to our premium level and then extends the range. So our continuation. So that was the continuation. It continued going higher, took out the high, and then reversed. So that now becomes our reversal pattern. When a body trades below the low, it does and keeps running. Doesn't come back and give you your entry on there. Just keeps running. Now this one here stops right on there. We want to wait for this body to get taken out now and this whole candle to be our short. Not a clean entry here either. Consolidation. A nice displacement candle here. And then this consolidation for a CAM Model 1 entry for a short. So what have we really got? We've got the 4 trade models plus the 3 CAM models. And the CAM models would be this. Right now, this is a good CAM 3 all the way up to a CAM 3. So CAM 1 would be a drop down, come back into this wick to a body. That's CAM 1. CAM 2 is to 50%. CAM 3 is to 50% of this. Right there. If you close a candle above 4621 on a close, chances are you're going higher. It's a fail. That's a CAM 3 right up there. So 50% of this consolidation, CAM 2, CAM 3, you don't want to see. You can get a wick through there. You can wick all the way up to there. So as long as a body does not close above 50%, CAM 3, you should go short. But we have to get a displacement candle here first, though. Just so you're sure, so you're clear. CAM 1 and CAM 2 are literally Michael's consolidation, return to the high, and return to the midpoint. That's CAM 1 and 2. I called it CAM 1 and 2 because Michael didn't call it anything other than a return to the consolidation. CAM 3, I added myself. That's the price leg that it tends to make a price leg higher, take out a high, come back inside 50% of that price leg, and then go lower. That itself is a CAM 3. That's an add-on to Michael's consolidation models. Anybody want me to look at anything? Any specific stock you want me to look at before I leave? Any asset you want me to kind of look at? Yes, no? I'll give you a few minutes. If I hear nothing, I'm out of here. Silver and gold. Look at that. That's a nice little displacement. Short. That's a short right there. I would have got short right there had I seen that a couple of minutes ago. See how the body trades below that low? Then you're looking for this candle now to provide support. Come back into it and go short. Look at that mean threshold. Look at that hold price. Right off an old data point as well. Overlapping data points, and down she goes. As soon as it breaks that low, move your stop loss to break even, pay yourself right there, let the rest ride, and you're targeting down here. Take profit model 2, internal range liquidity hunt. How are you guys doing for your trade models? If you're an internal range liquidity hunter, you're all over that right now. Shorting the shit out of that. That's all you do. One model, get really good at that one model, follow all the rules of that one model. Have a nice day. Should take this on the road. Silver on the 1 hour. Vitaly, he's always like, just give me silver. Vitaly's a pirate now. He's like, I just like silver. I like the silver. Yar. That's all I care about, lad. Just give me the silver. Give me the gold and it gets me the silver. Vitaly, right now, we've got that big candle that came down on the 4 hour like a rocket. It just shot. It failed miserably and hammered into the ground. We've got our BISI here. We've got a SIBI way up here. They're inverted now. Usually we like to see the SIBI here and the BISI up here. But now we've got an inversion BISI SIBI. Right? They're not in the positions they're supposed to be in. This one should be there and this one should be down here. Right? Vice versa. So this is it holding price and driving it higher. And this, you want to see it break through here and take out. Unfortunately, we got the bull trap is attached to it. So you have to wait for the bull trap to let go as well. Because it's so close, it'll literally go like this. It can pop up here, close up here, hit the mean threshold, and you go, good, I'm going to go long. And then it comes all the way back down here, and you go, I'm still long. And then it starts to trade through here, comes back into that, and then starts running lower. So I'd have to wait for that on the hourly to break the high, because you're more than 50% inside here. So unless there's a smaller time frame that gives you a run inside this larger range, so go from a 4 hour down to a 1 hour now and have a look. So that's the 4 hour. Let's go to the 1 hour. Is there a reversal in here? No, there isn't. All there is this candle right here. As soon as the body trades above it, comes back inside it. Look at that mean threshold. Holds back the price, sends it higher to the premium box. That one. We also have the next one down, 15 minute. So don't forget, we're looking at a 4 hour chart now for proof to run higher. And there it is right there. Look right here. You'll see your long was right here in silver on a 15-minute chart. Oops. That's my reversal right there. Taking out a low, run above it, come back, find support at it. That's the wicks you want, you guys. That's the demand of price action, not that choppy shit you see here. You say, no, you can't trade that with any level of precision, because the wicks keep ripping through the data points. And if you're really anal about like the markets like I am, I demand the price gives me that. And then when you see this kind of crap happening, how do you play with that? Your data points are going to get ripped through. And if you're a precision trader, you don't want to give too much leniency to the market, because those wicks, this wick, ugh, ugly. When you get over here, that is the precision you're looking for. That is what you want. Tag it, 1, scale in 1, scale in 2. You didn't even get your third scale in. It just went bink and left. And as soon as it breaks that high, you pay yourself, you move to break even, and now you don't want to see it run back through here. Right? That one didn't break the high. It stays right on it. So as soon as it comes back, runs higher, takes out that high. Now move your stop loss to break even. It comes back, gives you a little, oh, I'm going to get you. Nope. And it leaves. Heads for my premium box. Box to box. There's P1, P2. P1 is there. P2 is there. So it goes straight through P1 right there on a close. Comes back inside P1 and then starts running higher. Hits P2, runs all the way through P2, runs all the way through the consolidation. And now I want to see a body displace above here, not just a wick. Displace, and then that becomes my cam models. But we didn't have a body displace. We just got a small little close. I want to see get up there. A displacement candle. That's not a displacement candle. That's just a stop run liquidity raid. So if it starts to eat through here now, half that level, this right here above this high, I want to see this hold. And now you can come back to, this is a graded response here. I like to see these fair value gaps occur above the high, but it's above this one, but I like to see them occur above that high. Otherwise, there's a stronger chance we could come back deeper into this range. So there's the full tag of that high. You want to leave now. Look at this lower time frame. See this reverse? See that reverse right there? Right up there inside that wick. See that reversal? It trades through it right there, trades back up inside it right there, and we go short. So right up here in that wick, we saw the reversal happening. Seeing that that was just a quick stop run, right? So you say to yourself, is this a stop run? If I see a reversal in here,
then I'm expecting to pull back deeper into that range. There's your reversal. Even if you said, I don't want to take that one, I want to be just sure, I want to wait for this market structure to shift or break. It does. Now you look, say, I want to see this candle hold price, which it does, and then it takes off and you go, I got my short here, I've got my short here. You have two opportunities to catch a short. And if you didn't take it, you don't trust it enough. Does that make sense? That's 15-minute. And I know you said an hourly. So I got nothing for you in the hourly, man. That's got to hold. These are inverted. So it's not showing me that it wants to go higher right now on a lower time frame. On a lower time frame, 1 minute, 5 minute, 15 minute, all tell me it wants to go lower. So that's petering out above here. On an hourly, not worth trading on an hourly. Too many wicks. Lower time frame, hunting in an internal range liquidity hunt. Look right here. Oh, it hit it already. There on a 5 minute. Right on the money. This candle, you run above it, come back, tag the high in the open. It hit the high right there. And now you're looking for a box to box trade right here. I'm looking for this, and I'm going to get this one out of here now and put it right here. Right there. That's D1. It's also hit that last up close candle. You know, those little candles like this, we say we want to see it come back and tag the top of it. Look how tiny that is. Boop. Came right back into it, hit it, and now we've got a little kickoff. Now I want to see this candle hold price back, because see how we got our change in direction here? If we close above that, look for the bull trap. The bull trap makes up the base or the ceiling of that SIBI. So we've got to wait for that thing to close through there to get back in touch with higher. Otherwise, I want to see that hold, drive it back lower, and start looking for my discount box. Right here. That's it. Anybody else? Silver 1 hour and 4 hours. So you've had your 1 hour and 4 hour. There's your 4 hour. There's your 1 hour. 1 hour is your premium box. You're inside the premium. Now you want to see if that discount box right here is that discount. Stand by. Oh, it's not. That is not a discount box. It's literally, its low is the 50%. Nutso. That's all premium. You've ran up into that premium all the way down into the discount. Oops. 25%. 25%. So that's the discount of the discount. And this is the premium. Above 75% is the premium of the premium. This is the discount premium. And if you don't understand what I'm saying there, I take this. I'll explain it better like this. There's only 10 in here anyway. Quarters. Premium, discount. Now you take that premium and discount box and you subdivide it into more premium and discounts. So if that's the premium box right there from 50% up, this 75% is the new equilibrium. So that is premium, premium, discount, premium. This is premium, discount, discount, discount. That's how we call that. And see how we went from here, went down right into the discount, discount, right above the premium into the discount premium, just dipped down into that premium discount and then ran all the way up to just flaked into the premium premium. Now, if you understand how price action likes to move from an area of premium to discount, you'll also understand the fractality of inside that range. when you're in the premium portion, it likes to go to premium and discounts inside the premium range as well. That's what fractality is all about. But if that kind of threw you off and you're like, I don't know, you're talking too many premiums and discounts for me, then it'll come to you. In time, it'll come to you. Okay, no, again, just thanks for everything. I'm out of here too. Hope your mom gets better. Thanks, Abs. Bless you, buddy. Love you. Take care. And Vitali, LOL, missed it. Sitting back. Thank you, Darren. By God's grace, made a boatload of silver trades by implementing ICT. So glad you're doing it, man. So glad you're making some money. That makes sense. Good. Yeah, go back over. I'm not going to explain it again. Go back over the video if you missed that portion. I will explain everything I do with logic, and hopefully it works for you. Until tomorrow, I wish you guys all the best. Be careful out there. Silver looks like it's the only thing that's moving any semblance of clean right now. My focus is going to be on silver and gold. I don't even know if gold's really that good right now. No, gold's not. Silver's better. On a 1 minute chart, silver's acting a lot better. It's a lot cleaner on 15 and 5 minutes. Yeah, that's it for me. So if you're new to our channel, like, subscribe, please hit the thumbs up button, because that kind of helps our channel out as well. We want to get the word out, help people out, and it's not about selling anything here. We're just trying to help people out. So if you know anybody who's trading and they want some help with ICT stuff, by all means pop in and hit the thumbs up, like. We're here every day for you. I'll see you guys tomorrow, and as usual, I'm sending the love, my friends. Sending the love. Take care, and I'll see you tomorrow. Where are we at here? There's a button.